Many of you in the Financial Fitness Challenge, cohorts 5 and 6, have made tons of millions from the last penny stock recommendations that I made. And we are in cohort 7 right now, and cohort 7 were asking me, should they still buy the stocks from the previous recommendations? But a lot has changed in the market, particularly since the previous recommendations. There has been an incredible bull run in the Nigerian stock market in June, and so we need to adjust the recommendations. So here are 10 penny stock picks for quarter 3. But I want to make some disclaimers and then also offer some tips before I give you the 10 recommendations, and I will tell you why you could consider buying those stocks for now. So the first is a disclaimer to say that this is for educational and informational purposes only. The truth is that no one can accurately predict the market like 100%. Nobody does that. So if anybody comes and tells you with 100% confidence, buy this stock and then you're going to become a multi-billionaire, I think you should doubt that person a little bit. So I just want to put that out there. First of all, that it's still important for you to do your own research. So I have done some considerable research to come up with these 10 penny stocks. I also want to say upfront that for me personally, this is not my entire strategy in the market. I have a dual purpose strategy in the stock market. The first is I have stocks that I buy to keep, like for life. I'm not selling those stocks. So they are dividend stocks. Of course, they do appreciate. So one of those stocks is like Presco that I bought at 450 Naira-ish. And today Presco is at about 1,233 or so and keeps climbing. But that's a stock that I continue to buy, to accumulate, that I don't plan to sell anytime soon. I also have JITCO, which I do not plan to sell. I continue to accumulate that. Now, the penny stocks, my penny stock strategy, which I started recently, because what I have done is for my dividend stocks, the stocks I'm going to hold for life, I opened an account with a broker just for those stocks. And then I have another broker just for my penny stocks strategy. So I compare how both portfolios perform. But again, the penny stocks, I don't intend to hold as long as I hold the dividend stocks. And the penny stocks might also do very well and perform wonderfully and become like a permanent dividend stock. But I generally want to look for companies that I can hold for 3 to 5 years in the penny stock category, while monitoring the fundamentals of those stocks quarterly to see, should I still hold them up to 3 years or 4 years or 5 years, or sell them and reinvest in another. So I wanted to make that very clear. And then before I give you the 10 stocks, I want to go right down here and then give you tips, especially if you're a beginner investor. And it doesn't matter if you are an advanced investor. So first, use limit orders. I always use limit orders. But there are situations where the stock is in such a hot demand. You know, you have like 300,000 offers and then 50 million bids. There's no way that your limit can work in that kind of market. It can't work. So that's why, for instance, some of you were bidding to get JITCO at 88, 89, while there were just very few offers, and then the price keeps climbing. So, but ordinarily, use limit orders, set your prices and wait. Secondly, don't go all in at once, putting all your money into one particular stock. Okay, like they say that Rome was not built in a day. This is called investment, gradual buying, and what some people call the dollar cost averaging. Number 3, whenever you buy a stock and it drops in the market, don't panic. It happens. Even the current bull run that we're experiencing in the market is not going to last forever. It's not going to last forever. There's going to be some serious retracing that will happen. because the market doesn't just keep climbing. But the interesting thing is that there are some stocks that have very excellent fundamentals that they will climb and they will never retrace to where they started climbing before the bull run. So they may run from 70 to 100. And if they are retracing, they will never retrace back to 70 because their fundamentals are so good. So if they retrace, it might just be from 100 to 95 or 90. And then another bull run, they could do 120, 130, even 150. And then if they are retracing, so you see, there's always the bull run, there's the bear, and some retracement, and then another bull run. Okay, so just bear that in mind. So whenever you buy a stock and it drops, don't panic and begin to sell. That's the way, especially if the fundamentals of the stock are solid. Don't do short-term thinking, and there's nothing to fear if it goes up. Some of you bought Qtix when I recommended Qtix at 2 naira 40, and then it's gone to 3 something, then 4 and almost 5, and then it fell a little bit again. So don't panic when that happens. Okay. Fourthly, zoom out, not in. So you don't want to check your portfolio every 5 minutes. It's going to give you blood pressure. And by the way, it gives you an illusion that if you continue to check, that it will grow faster. It doesn't happen that way. Okay. Then diversify. Don't put all the money into one particular stock. The temptation is there. There's a balance between putting all the money in one stock and then diversifying. I know that a stock might be so promising that the tendency is to use the whole entire 1 million and put in one. So you don't want to spread your money too thin, but you also don't want to pile it up in just one particular stock. All right. So number 6, set goals, not just vibes. You should have a specific goal of why you're investing, so that the vicissitudes of the market, will not give you trouble. So if you know you're saving for retirement, like in my strategy, I have the stocks that I never sell. It doesn't matter what happens in the market, even if the entire thing crashes, it doesn't matter because it's an investment objective, which is long term. Again, number 7, don't marry your stocks. Don't fall too much in love with any stock. Even my dividend stocks, I don't marry them. If it stops performing, just let it go. Okay, it's not a romantic relationship. It's business. So review your stocks monthly, quarterly, even weekly. My stockbrokers send me quarterly valuation with important information that I use to evaluate. So don't marry the stock. It's business, not romance. And then, most importantly, ask questions. Ask questions often. Then join forums like our Financial Fitness Challenge and like a couple of other very brilliant commentaries that go on daily in the market. Get yourself invested and ask questions where you don't know. All right, so here are the 10 stocks I would recommend and consider for those who have already bought. Some of them I had already recommended, and some of them are very new. So the first recommendation is Jaiz Bank, which is currently trading at about 3 naira 57 kobo. They offer banking services without interest, and they are expanding with mobile banking. So in the past 6 months, I looked at their charts. The price has gone up consistently, but it's pulling back a little bit. So today might be a good time to buy. Why consider Jaiz? The growing profits, their profits are just outstanding, incredible. And then their balance sheet is safe, and then more people are keying into the mobile app. So you could look at 330 to 350. And because I'm encouraging holding for at least 3 years, as long as the fundamentals keep doing well, in 3 years, Jaiz Bank might reach 10 to 12 naira, or even much more than that. The market sometimes performs wonders. My second recommendation is Chams. Chams has done very well. And part of the reason is that they have almost the biggest share of the market in providing technology for national ID, for payments and biometric security, which have come to stay. They've come to become the part of our lives. And so they have a very solid business model that is likely to continue to grow. And they're also thinking about expanding the services to different countries in the continent. And there's still a very strong trend. It's been rising in recent times. Okay, so they have government contracts. More people are using their technology. They have big increase in profits. So you could buy at 3 to 325. Chams expected in the next 3 years to do up to 15. It can do 3 times that. It can do 50. Nobody knows. But buy and watch the fundamentals. TIP was also in my previous recommendation, just like Chams was in my previous recommendation. And they dominate the Nigeria's waste management industry. They clean up oil fields. They process dangerous wastes, like medical waste and all kinds of things, to help to keep the country waste free. So these are very specialized waste management company. In the past 6 months, they've gained 140%. Actually, they are one of the fastest growing stocks in the market. So I think it is still undervalued, even at 9 naira 91 kobo. And so you can get in anywhere under 10 naira is still good. And its expected future price 30 to 35. But as I said, it could reach 200. It could reach 300 in the next 3 years. Nobody knows. But you can start right now because your fundamentals are good. I recommended AIICO, which is the next one, when AIICO was 1 naira 60 kobo. So I and some of the people who listened at the time bought AIICO at 1 naira 60 kobo. But AIICO is good. It's an old company, still doing very well. They offer life, health, property insurance. And in the past 2 weeks, it's moved, or even a week, it's moved from 1 naira 60 kobo to 2 naira 30, and they have a very stable growth. So AIICO has very strong quarterly earnings. They are currently undervalued. It's good. The stock is currently undervalued. And again, there is a lot of things brewing in Nigeria insurance industry, very reminiscent of what happened in the banking industry. And when they are made to recapitalize, many of these stocks of insurance companies that we are seeing as penny stocks will not be there anymore. The fifth one is FTNCocoa. I didn't put this in the previous recommendation when it's actually much cheaper, because I had looked at their volume of business and their earnings, and it wasn't quite impressive. But a lot of things have changed since then, especially because cocoa prices are rising globally and Nigeria wants to encourage more cocoa exports. Plus, there is a new leadership in FTNCocoa that is fixing the company. So in the past 2 weeks or so, or 3 weeks, it's jumped from about 5 naira to over 8 naira that it is today. So it's a good buy if you can get it at 7 naira 30 kobo. But watch the offer and the bids and the movements, and then you might be able to say where. Universal Insurance is my 6th recommendation. It's currently at 87 kobo, but it was at I don't remember, maybe 60 something. I bought at 60 something like 3 weeks ago. It has suddenly started moving, and why it's a good pick is it's gaining fast growth in customers. It's one insurance stock that has been fairly stagnant for a long time, but in recent times they are getting good businesses, getting big tech companies like Paystack, which is really a big deal. And so Universal Insurance might pull a very big stunt. We don't know. So, but I think it's one that I recommend. I bought at 60 something and not quite a month ago. And so that's one of my recommendations. WAPIC is another good one. Currently undervalued even at 2 naira 55 kobo. Of course, they're a very good insurance company, and they have very good earnings. They have a very good leadership, and it's also it's also expected that they will start paying dividends again very soon. So that's a very good one to accumulate right now. I recommended UPDC earlier. I think it was like 3 naira or 3 naira 5 kobo or something. Stayed there for a while, but I think it's still a good buy. They build and manage homes, malls, office buildings, and I think they are also in some bit of hospitality, because they do have, if I remember correctly, some hospitality facilities across the country in very, very choice locations. Very, very choice locations. So and then the revenue is good, up 67% year on year. And they have a very, very good Q1 result. So UPDC is a good recommendation for now. Triple G is one that I'm taking another look at. So they are doing well in terms of logistics, delivering parcels, printing secure documents, and helping companies with back office services. It's a good pick at this time because they have stable growth, and then they have government contracts, which is always good for business. And then they're exploring opportunities in e-commerce logistics. So that's a good recommendation for now. And then another surprising one, when I was doing the research, is Daar Communications. Why I picked interest is that they are actually on the way in becoming an ad tech and streaming company, going into digital transformation, going through digital transformation at this time. And then again, there's the government support for local content. It's still under 1 naira at this time, and it's a high risk, high reward. So don't put too much money in it. But like I said, watch your technical data on these companies so that you know when to go in and then when to come out. So again, these are really great opportunities and then very interesting times to key in and build wealth. And I hope this has been very, very useful. So use it, do your own research, and then make your decisions. And then trust the market to do what the market does. And whatever happens, keep showing up because you never know what's coming your way next. I'll see you in the next video.